Well, hello and welcome to the Shadow Traders training program. My name is Melanies, and in this video I'm going to be talking about the moving averages and how they change directions from their fan into fists and into the new fan. It is very important to follow your moving averages when making decisions on good clear trade entries, as well as your 13 EMA gap fills. So what we need to focus on first of all is what happens when these moving averages change direction and how they change direction, and when is it a good time to enter the market and when you should be sitting on the sidelines and staying out of the market. So what I've done is I'm using the 6C market. You can do this with any market, and I'm going to use the 1 minute chart. You can apply the same principles on any time frame. However, I like the 1 minute because most people make their entries on a 1 minute, and also the 1 minute is a magnified view of the market and trend changes compared to that of a 10 minute. You're still going to see the same moving averages demonstrating their trend changes, but they're going to be over a longer time frame and therefore not happen as often. So let's start with right now we're at about 8:30 in the morning on this chart, and I've taken it a few days back so we can scroll through and see how the moving averages play out and what you should be looking for. So as you can see, we started in a bearish fan coming down. The 13 is at the bottom, the green moving average, the 20. The 100 should be here. It's just that I need a few more days of history for it to come in. You'll see it coming pretty shortly. And then I have the 50 moving average and the 200 moving average. Now what happens is as we progress, you're going to see how the moving averages play out based on the different ways they change directions. So let me just show you a couple things first before I go into it in detail. As you can see, the market's coming down. Then the first thing to cross are the 13 and the 20. They are the leaders in the trend changes because they are the shortest moving averages, so they go first. The next thing to cross, what will happen is you'll see that they'll ultimately try to cross the 50 moving average. And then after that, they will continue in the new direction and cross the 100 moving average, which is your blue, and then finally they will cross the 200 moving average, which is the red, and then they will give you the new fan in the new direction. So now we have the 200 moving average on the bottom, the 100, 50, 20, and 13 on the top. So now we have gone from a bearish fan to a bullish fan in the new direction. So we went from a downtrending market and we changed to an uptrending market. As you can see, for that to happen, at some point all the moving averages have to come together while they're in the process of crossing. When they come together, we call that a fist. I also like to call it a nice club sandwich. As you can see, everything is very close together like you would see in a club sandwich. Whenever you see the market is in a fist or club sandwich, you will notice that the price, the candles, tend to hug the moving average and become sandwiched between them like a pinball machine. And so there's not a lot of price action. They don't go very far. It's a short-lived trend, and they kind of have a whipsaw. They go down, up, back and forth, back and forth. This is a very dangerous time to trade in the market, and what you will find is that you will maybe get hesitant and nervous and get in late. Like let's say you got in on this candle just before 9:42 because you thought it had momentum. It was, looked like a fairly good sized candle, and you thought the market was going to continue lower. However, if you look at your 20 moving average, it's flat. Your 13 is giving us an angle, but not as much divergence as you would see over here. And on top of that, we're meeting with resistance with the 200 moving average. So if you made that entry, it would be an error in terms of we don't have 3 or more confirmations to help us decide that this is really going to pan out into a nice downtrend. So what happens is it turns on you, and then if your stop loss is pretty close to the price, you will get stopped out, or you are faced with the decision, would you stay in this trade and wait for it to ultimately come back down, or would you get out? And in this case, if you had have decided to stay in because you think that the market's going to come back down, it would be a big mistake, and you would find that at some point it would hit your stop loss and take you out. So how do we avoid these situations? I'm going to go into this in more detail in the next video when I talk about how to use additional time frames like the 3-minute, the 5-minute, and the 10-minute to help you predict these trend changes and how long they're going to last for, and when you should wait to make your entries. So let me clarify why this would be an entry in terms of a fan, and not where we just looked at over here, why this wouldn't pan out to be a good entry, even though the candle and the momentum is there. Like I said, always remember you need to have at least 3 or more confirmations before making entries in the market. And so with this, in this situation, what I find the best time to make your entries for clear trades, the ones I call where all the stars align, is when the market is in a fan. So you've got 3 or more moving averages at a strong angle. They look like a Chinese fan, and there's separation, which is your key ingredient. With separation we call divergence. So there's separation between the moving averages and separation between the 30 moving average and the candles. The candles have to break away. That will tell you that the trend is strong, and it's likely to continue. This chances are it's going to have longevity, and also that there's going to be good price action, meaning it starts at one price. In this case, it started up here above 1.3580, and it dropped all the way. The low on this one was 1.3530. So you can see that there's a lot of ticks, a lot of price action, and you could take advantage of this trend and make your target goal. So what I would like to show you is how to look for these fans and when to take advantage of them. So let's continue further. Over here we see that the 13 has crossed and the 20, and is now changing the direction, or attempting, the first attempt to change the direction of this bearish fan. But you'll notice that it met up with resistance against the 200. It kind of penetrated, but then it didn't sustain the new trend change and came right back down. And you will notice whenever there's trend changes from a strong fan that the first attempt is not very successful unless you're going to see it, unless it's a news item or a specific strategy like the 10 and 2 o'clock reversal, which I associate more of a news item. And those are big reactions in the market, and they can cause the first attempt of trend changes. If the market is changing direction during that time, they can cause it to be a big move versus a smaller short-lived move. And as you can see, the first attempt, even though we got nice price action here, that was because we had separation, we had divergence, and we had a nice angle on the 13. And I'll show you another time when it's not as strong and shorter lived. So the key ingredient is separation. Can you still take advantage of this trend and grab your target ticks? Absolutely. Let's say you were doing the cookie cutter formula, which I strongly suggest, and you are looking for 4 tick moves. You could easily make an entry here and capitalize on your 4 tick move. And we're going to talk about this more as we go. So let's follow the trend changes throughout this time frame. As you can see here, it's made a second attempt and now ultimately penetrated the 200. But notice, just because we have penetration of the 200, we don't really have alignment of all the moving averages. Now what's happening is that the 13 and the 20 is now ultimately crossing over the moving averages, as I showed you. So we started off with a fan. We then had a change of direction. Every time the 13 and the 20 cross to go in the opposite direction from the previous overall trend, which is this bearish fan, you can see here it continues. every time this 13 crosses opposite to that fan, I call that a trend change, a change in direction. Okay, because the most important prominent thing in the market is the fan, right? Every time it crosses over, you'll see the 13 will cross down and the 20, they will be the first to go. So now over here at 1049, we are now experiencing a trend change from the bullish fan that we just had. So whenever you see that, you're going to notice that the first attempt is usually short-lived. It's never going to be the biggest move unless, like I said, it's a news item or some other fundamental thing that has come into play in the market. But most times you're going to see that the first attempt is short-lived because it's going to meet up with resistance against the other moving averages. Because now you remember, your 13 and your 20 are countering the market. They're countering the overall trend. And I like to give people an analogy. Let's say in the world of business, there's three kinds of business. You can be in business for yourself as an individual. You can have a partner. So now there's two of you in business together. Or you can have three or more and what's officially called an organization. If you have three or more people, you have an organization. Now, out of the three businesses, you're going to find the one that's the strongest and probably will last longest because there's more support, more people to do tasks, is the organization. When you have three or more people, it's much easier for the business to survive, and it's easier for more to get done. So it's a stronger business. That as opposed to a partnership where there's only two of you, and you can safely surmise that it may not always last as long as you had hoped it, because people have falling outs with partnership, and also there's less of you to cover all the tasks, so you may not be able to expand as you hope in a partnership. So I like to use that analogy for the moving averages. Whenever you see that the 13 and the 20 cross against the overall trend, what you've got now is a partnership. It's the only two moving averages that are taking on the new direction is the 13 and the 20. The minute you get a third moving average, three or more moving averages, now you have an organization. So what you'll find is that when you have three or more moving averages aligning with divergence and forming a fan, you'll notice that there's more price action and the trend is stronger, and there's more longevity to the overall trend, and it won't be as short-lived. Whenever you'll find that it's just a partnership, the only difference between this partnership, and let's show you another example. Let's say this partnership here where it's crossing down against the overall trend of the fan. You can see why is the market flat here? Why is there no price action? It's really just crossing over each other completely flat. Is because there's no divergence, and look at this, how much separation there is between the moving averages that are supporting the overall trend, which is a bullish fan. So now this partnership has to go against this overall trend, and they're not strong enough to do that. There is no separation, and therefore you can see that how short-lived the trend is, and if you made an entry here thinking it was going to be a nice big clear trade, you would be making an error. Big mistake. So how can we predict that versus something like this? And we'll go into that in more detail. The reason this partnership worked out pretty nicely is because we have a lot of divergence, we had a nice angle, and there wasn't as much separation between all the moving averages, so there wasn't they didn't have to counter a huge force in the market, which was this bearish fan, which was a medium-sized fan. It wasn't the biggest fan, so it was very easy for them to counter that trend. However, they still met up with resistance on the 200 moving average, and you need to know this. This is the most important thing in moving averages. The 200 is your most important, most senior moving average out of all of them. It offers the most resistance in the market. The market really has a hard time penetrating that 200 moving average. And whenever you are faced with the 200 moving average and an entry, I always choose to stay out. Never make your entries in the market on the 200 moving average, because what will happen is it's easy to see in hindsight that, yes, let's say I made my entry here at 8.54 on this green candle because I said to myself, well, there's divergence, there's a clear trade. It's easy to see that, okay, it's penetrating. The only reason I possibly do it is because of the divergence. However, what you don't know is that it could turn around and come right back down. So if you were hesitant at this point and you made your entry here, you would have a problem. Let's say you saw that, is it going to go through? You thought about it, you got in over here, and now it turns around and comes right back down. And that's the nature of the market when it's on the 200. It's like all the rules don't apply anymore. The 200 takes over and it nullifies all your basic rules on the strategies that you have learned. So whenever the market's on the 200, stay out and wait for it to break away, come back down, or ultimately penetrate completely through and have a breakout in the new direction, which we see as it takes on the new bearish fan. See, here's a nice opportunity. It's broken through the 200 and we get the price breaking away. We got divergence, we have a nice fan forming, and you can easily jump in. Let's say you were doing the cookie cutter strategy, just going for 4 ticks. It will be very easily met in this trend right here. So this will be a good time frame to make an entry in the market. So let's continue. As you can see, we had a nice this is the afternoon time frame. We had a big fan, and it just kind of, and sometimes when you have just a total up day where, let's say, the Dow's up 100 points and it hits the top, it does all the, it has all the volatility in the early part of the morning because it's now forming the trend, right? But let's say suddenly we had a lot of contracts being bought and sold, and the Dow is up 100. What you'll find is that the market will hit the high of the day and kind of just flatten out, and you'll just see that for the rest of the afternoon. Whenever you see that, just stay out of the market. Go look at a different market, or just come back the next day. You don't want to be trying to grab ticks out of this. It's not worth it. The risk is too great, and the margin of error is too great. And as you can see, this is a totally flat market because it hit the high and it wasn't going to go any further. Let's continue. Now we start a new day. You can see it just ended high for the day, and that was it pretty much for the trading of that day. We start in actually this is the evening time, and as you can see, it continued up in a nice fan. Now you're going to see again, we're going to have the first attempt of the trend change. We have the partnership of the 13 and the 20, as I have explained. It met up with the 50. Now it got hung up on the 50 moving average, so we are experiencing some resistance. So therefore the market is now flat. We've got a nice club sandwich forming, and so you're going to see the trend is very short-lived. It goes back and forth, and that would not be a good time to trade. What you want to do is wait for it to give you another breakout in alignment with all the moving averages, so you can see the overall bullish fan is continued because the first attempt to change the direction was not sustained due to too much resistance. The divergence in this bullish fan is so great that it's going to take a lot for this trend to ultimately change direction. So what happened is it met resistance and it just bounced right back and continued back up. So what you would do when you see that is you stay out of the market during this time frame when it's trying to change direction against such strong resistance, and wait for it to ultimately bounce back. Now you would make your entry to grab your cookie cutter 4 ticks, because now you have the support of the moving averages, and you're now trading with the trend of the market, the overall trend, and you're not counter trending the market. You're not trying to trade against it. Let's continue. As you can see, this is during the late hours of the night, so it just kind of stayed up. There wasn't enough traders during this time frame to really change the direction of the market. So let's continue on to the next day. Okay, so here's another classic example where you got nice divergence, you got the moving averages aligning, we have a nice fan, nice opportunity. Then we have a trend change. With a trend change, the cross is happening, we got a strong angle on the 20 moving average, nice divergence. It's going against the other moving averages, but it's still a good opportunity to take advantage of a clear trade here. You can still get a 4-tick clear trade very easily out of this move, going up to the 200 moving average. I would never be making an entry on this 200 moving average. As you can see, it was very short-lived. It also bounced on a pivot and then went right back. So if you're trading, if the market is, I always tell people, 1.5 to 2 inches away from the moving average and making a strong effort to go to that moving average, jump in, because you find yourself in a good clear trade opportunity, because you'll see that the 200 moving average is like a magnet, so the market heads for it like a horse is heading for home. So if you see a clear trade opportunity going to the 200 moving average with no real major resistance in between, and there's divergence and you have the other confirmations to support that move, then take advantage of it, because your chances will be a very nice clear trade. As you can see here, very easy to make your 4 ticks and get out. But please get out as it hits the 200, because it could bounce right away. It may not penetrate through. As you can see here, it penetrated, but it didn't sustain and it bounced back. So let's continue on to the new day. As you can see, this trend change didn't sustain. Now we have what we call a fist, because ultimately we're changing from our previous fan, which was our bullish fan. Okay, we're changing direction. So what comes after a change direction? You get a fist, because all the moving averages now have to cross each other to then cross over and form the new direction, the new fan. So before a new fan, know that every time you see a fist, what's going to happen next? You're going to have a breakout. It cannot stay in a fist the whole day. It has to have a breakout at some point. We have to see a fan. So whenever I see a fist, I get ready. I don't try to enter in here, because what happens is people make their entries here during the fists, and then they get stuck because they're not paying attention. It's almost like gambling. You don't really have a real direction, and so what happens is you get stuck, caught going the wrong way. Let's say you got in here thinking it was going to go long, and then the market turns on you and you miss your clear trade opportunity, the real breakout you miss, because now you're stuck there and you're married to the trade and you want to try to ride it out to see if the market comes back up. That is a big mistake. That's why I tell people, if you do happen to have an oops moment and get in the market during this time frame, and because you're not paying attention to the moving averages, you got sucked into the candles, you saw momentum, you think, oh, it's going to go, and so make sure that you get out as fast as you can and jump in on the real opportunity, which is on the fan. Here's a great opportunity to do your clear trade, grab your 4 ticks and get out. So now you're going to see we have now finally changed direction from a bullish fan back to a bearish fan. You can see the 200 on top. And this is the best opportunity in the market. I call this the clear trade where all the stars align. When I started as a new trader, this is all I did. I would just jump in on the fans and only the fans. I would, you know, and even if I was nervous and hesitant and I got in late, I would still make my, and when I first started, I was only going for 2 ticks. So you can see anywhere in this trend, if no matter how I got in, I would make 2 ticks and get out. And obviously I would try to get in as close to the breakout as possible. If I wasn't really sure here, I'd wait for the second candle. I would see that would fall lower and there's divergence, and then I would take advantage of it. But I'm going to explain the clear trades much better and really give you the exact entries using the other confirmations in the next video. So I'm just trying to give you an overall of what you should be looking for. So the fans is the perfect opportunity for the clear trade. As you can see, we have the price below and we have all the moving averages lined up and separated like a Chinese fan. Now here we have a direction change. The 13 is crossed and it's now making an attempt to cross and change the direction from a bearish fan to back to the bullish fan. But you can see that it's short-lived, it didn't sustain and met up with resistance on the 50 moving average. The price is hugging the 13. So Could you take advantage of this opportunity to do a clear trade here? Absolutely. If you got in here and you went for 4 ticks, you could absolutely take advantage of it. But know that it's going to be short-lived. Whenever you make clear trades on trend changes versus clear trades on fans, know that it's going to be short-lived because it's going against the other moving averages and the overall existing trend of the market. So you want to just make your entry and get out. If it doesn't work out to give you 4 ticks, take your 2 ticks and get out. Don't stay in or stay married to the trade thinking that it's going to ultimately go your way, because it may come back down, the trend may be too strong, and as you can see, it came right back down, and if your stop loss was closer to the price within a 4 to 8 tick range, you would be, in this scenario, you would be stopped out. So it's very important to really watch when are you making your clear trades. Are you doing them on trend changes or are you doing them on the fans? See, I would grab my 4 ticks, get out, and I'd wait. As soon as I saw the new breakout here, I would grab my 4 ticks and get out, because I know that I could capitalize on this, because now I'm going with the trend, I'm following the fan versus counter trending and going against the fan. So now that was the first attempt. As you can see, now we have a second attempt to now change the direction of the market, and it met up with the 200 moving average. Look how it didn't really penetrate, and it turned around and came right back down. That's why I tell people, if you happen to get in here on this trend change to get your clear trade, 4 ticks, do not get in late right on the 200 and think it's going to go all the way through just because you have some divergence. The 200 is the strongest moving average. It could stop on a dime. I never make my entry right at the 200. If you didn't get in here and take your 4 ticks going to the 200 as I just explained, then you waste it. Forget about it. Move on to the next one. Wait for the next opportunity. It will be there. Do not force the trade, chase the trade, and wish the market your way, because wait for the market to give you the setup. If you miss it, oh well, there'll be another one. So as you can see, it tried a second time to penetrate the 200, didn't do it. Now we have what we call that a fist, a nice club sandwich. Okay, there was no real direction. It came down, went up, came down, went up. Now finally we have the breakout of the 13 crossing the 200 and the 20 crossing the 200, and we have now a nice breakout and the fan in the bullish fan in the new direction in the market. So as you can see, this will be a good opportunity to take advantage of your 4 tick clear trade, and wait for the market to penetrate through the 200. Even if it's after the cross, and I'll go into this more, there's always more than one opportunity to do your clear trades on fans. As you can see, we changed direction here. Here was another opportunity to take advantage of your clear trade, because you had the moving averages to support it, you had your organization, so you had some nice price action. Now we have a trend change. And it's a very nice trend change, because as you can see, it was able to penetrate all the moving averages and just consistently continue in a nice long trend. You'll notice that the price is hugging the 13, and the 13 and the 20 is like a snake. Now usually when I see this type of trend versus the basic fan, where it's it tends to break away, do a couple of breakouts, and then change direction, what I usually find when you experience that, it's because the 10-minute is doing a clear trade and it continues for quite a while. Or you'll experience like the Dow's going down 100 points, or something that is continuing the overall trend in the market, and you'll just see lots of little stair steps going lower and lower and lower. This is a great time to trade, because all you need to do is just follow the trend, and don't worry about any gap closes. Just do clear trades on those, and when the market does that. Now we have another trend change, trying to go against the moving averages. As you can see, very choppy, not very there's not much longevity to it, not very long. It crossed back down over here. Now it's meeting up with the 50 moving average to cross over. So we get the start of our fist over here. It came back down because it wasn't able to penetrate the 100 moving average, met up with resistance. So we had another little clear trade. Now you see how this price action over here is really nice, because again we've got 3 or more moving averages still in alignment. We still have that huge separation between the 100 and the 200. So we got nice price action. You could still treat this as a nice clear trade on a fan and take advantage of it. So as you can see, you can still treat this as a fan because you've got your organization in terms of your moving averages, and then get some nice price action here. Now we have the fist forming because it's still trying to change direction, but it wasn't able to sustain and ultimately go back up. So what happens is we have the fan coming right back down. And know that sometimes happens. That's why you got to be very careful when trading on your trend changes, going against the moving averages, because you'll suddenly see breakouts coming right back down following the previous trend, and as you can see, it did the same thing. I still call this a breakout. This is still a good opportunity to make your clear trade, because you're still going with the overall trend. What you're looking for is 3 or more moving averages in alignment, and to give you your fan. And this way you'll see that there'll be a lot of price action, meaning it starts high and goes really low. There'll be a great opportunity to jump in anytime and make your 4 ticks before it decides to change direction. As you can see here, we had another change of direction. Now notice how short-lived this change of direction is. Can you see that it literally just crossed and came right back down to follow the overall fan? Now this is really important. What is the difference between this change of direction right here and this change of direction right here, or this change of direction? What is the difference? Actually, sorry, it's this change of direction right here. What is the difference between that and when it's really, really small? Can you see here it changed direction, was really, really small? It continued with the overall trend change. It tried to change direction. And you will notice when you see them very small like this, and I'm going to show you in the next video how to really watch for this, you're going to notice that these are just gap closes on your 10-minute and 3-minute chart in the middle of a big fan. Whenever you see small retracements like this and they don't ultimately continue in the overall trend change, you will notice that they're just gap closes in the middle of your big clear trade on your bigger time charts. Because remember, your 1 minute is a magnified view of them, right? You see, what you have to note is that this overall fan has to be a fan also on your 10-minute chart. So just like your 10-minute chart goes through gap closes, the market breaks away, then closes the gap, and then changes direction. So you go from fan to change of direction and then a fist. So does it occur on your 10-minute. So whenever you see these little retracements like this, but they're not a big trend change, you will notice that this whole trend is a clear trade on your 10-minute chart. And if you go to see that, you will find it. And I will go show you examples of that in the next video. So we're going to talk about why you would not do a clear trade on this trend change, and rather do a clear trade following the direction of the fan. Here will be your opportunity to do your clear trade from 452 all the way down, and from 516 all the way down will be your opportunity to do your clear trade on the fan. This would not be a great opportunity. If you got in on a gap close and took advantage of those, got some ticks and got out, good. But if you got in late, you were a nervous trader, you would be in trouble. So I'm going to explain how to watch out for this type of scenario, and that's where people get caught. So as you can see, we had the big fan, the big bearish fan. We ultimately changed direction. You can see how it was very the price is very flat. It's hugging the 13 and 20 moving average, because now look at the separation between these moving averages on the fan. It has a lot of resistance to try to change direction. And you can see it wasn't able to sustain this trend change. It just came right back down, gave us another clear trade opportunity with the fan. When I first started trading, I only looked for these fans. Whenever I see this and if it's breaking out, I'm usually in by the second candle and grabbing my ticks and getting out. And I'll talk about that more later on. As you can see, they've made a second attempt. Now they've lined up with the 50, the 50 moving average, the 100, and now we have a nice fist. As you can see, the price is hugging the moving average, it's sandwich, and we have a lot of back and forth motion. This is what I call a whipsaw. Do not get caught trading these whipsaws because you have no real trend prediction right here. This could come back down following the overall fan, or it could change direction to create a new fan. And as you can see, obviously it changed direction and gave us a new fan, forming the new trend change. So what you need to do is stay out of when the market is fist and wait for the real breakout. In this case, I will be entering after the 200 moving average because here it's still kind of flat. And you can see our new fan forming. They had to cross over the moving averages, the 200 moving average. I would take advantage of this and I would wait. You know, you could enter here and take advantage of this. And as you see, it's kind of flattened out. Whenever you see the 20 and the 13 flatten out, then wait for the new direction to form. As you can see, it's crossing over, giving us a trend change. The reason it's flat is because it's now meeting with resistance against this bullish fan. Finally, it does give us some separation, a nice strong angle, and it goes for a big trend change. But now you see you have the 50 moving average, so you got your organization again. So we have longevity on this trend change, we have nice price action, we have nice divergence, we have 3 and then finally 4 moving averages in alignment, even though it hasn't synced up with the 200 moving average. Notice that it hit the pivot and the 200 moving average and bounced and continued back to the previous direction. Now we have a nice bullish fan again. And we have another flat trend change. Again, we have the finally crossing down and meeting up with the 50 moving average to give us a nice long trend. And this would be a nice opportunity going to the 200. Remember I said 1.5 to a couple of inches. If you've got a fan forming, you've got separation and it's going to the 200, jump in and take advantage of this clear trade here. It's always a really good clear trade because the market likes to go to the 200 because it's got to cross and eventually form a new fan, right? So look here, we have another fist. It's all forming. You see how flat, how the market's hugging the price. Don't trade during this time. And as you can see, it ultimately crossed to give us a bearish fan again. Wait for it to cross, and as you can see, once you get nice separation, nice angles on your moving averages, and you'll see the price will break away, jump in and take advantage of your nice clear trade. Now we have a nice trend change again, but it's still meeting up with a lot of resistance, so it wasn't able to sustain and came right back down to continue the bearish fan. This will be a good time to do your clear trade because you have the support of all the moving averages and you know that you could jump in any time and grab your cookie cutter 4 ticks and get out. We've got another trend change and it's very flat because look at the separation between the 100 and the 200. A lot of resistance, and it's lining up with all the other moving averages. The 50, the 100 are coming together, so we have a fist. You want to stay out of the market and wait for the real separation to start taking place and to give you a better opportunity, which you can see here. We have a clear trade going up to the 200, so that would be a good time to get in. It wasn't able to penetrate the 200. Look, it stopped on a dime, came right back down, and now we have a new fan forming back down. It's a little the problem with this is that you're approaching a fist. Can you see that? And so even though you got some price action, you want to be careful when the moving averages are all crossing opposite with each other because you're approaching a fist. So don't make sure that your entries are shorter and that you get in and get out. If you don't time them, if you miss this, don't just jump in and think it's going to go forever, because look, we have some major conflict here. We have the 100 going across the other way. We have the 200 coming down. Even though we've got 3 or more moving averages, so we have this nice price action. But don't think the trend's going to go forever and then jump in late. You have to really time your entries correctly during this time frame. As you can see, we just had a lot of whipsaw here because the moving averages are coming together in a fist to try to change direction. And finally, they ultimately changed direction and we're back to a bullish fan. So I wouldn't be trading during that time frame. I'd wait for this and possibly make my entry here at the cross where the candle's touching, take advantage of this nice bullish fan for the afternoon. Then we can see the change of direction into another fist. Fist continued because it's the afternoon, not a lot of traders. And then we came into another bearish fan for the evening. So you can see how long the trend lasts when you're on a fan and how much price action you get, meaning how far the candles go. So if you just looked for the fans and started with that, and even if you got in late and went for your 4 ticks, you could absolutely do your cookie cutter strategy and have consistent results without a doubt. Then as you got more skilled, you made your entries on the trend changers as well to take advantage of them. But you have to be skilled because you got to know, for instance, this trend change doesn't give you a lot of divergence, no angle, no price action, and you'll probably find on the 10-minute chart this is just a small gap close, and that's why it just continues and continues back down before it ultimately changes direction to go back up. So you want to time that with your 10-minute chart, and we'll talk about that more, like I said, in the next video. Here you can see the ultimate trend change occurred, and you'll probably find that this is in sync with your 10-minute chart. Here's your nice clear trade opportunity, a lot of separation, nice angle in your 13. And then it met up with resistance on the 200, and so on and so on. So that should, if you practice doing that, take your chart back for at least 5 days on the 1-minute chart, scroll back and just locate the fans versus the change of direction. Practice that, okay? You see what that actually looks like, and see the different types of fans, greater and smaller, you know, the ones that continue for a long time versus, you know, a smaller fan, something like this, and then it changes direction. Note the difference between a direction that has a change of direction that has a lot of separation, gives you a nice price action, versus a change of direction that is, you know, flatter. So what you have to do, like this, you have to watch out for that, and I'm going to talk about that, like I said, in the next video. So join me now in the next video as we go into clear trades, clearly defined, and we talk about why is this trend change flat versus the other one that gives you more price action, and which ones should you watch out for, and how to really spot the fans taking place for your clear trades. Okay,